the opinion that has come in from the global brokerages, the government's 2.11 lakh crore bank recap plan has prompted CLSA's Chris Wood and Goldman Sachs' Tim Moore to turn bullish on India. Darshan is back to tell us what the two market experts and what the two brokerage houses in particular have to say about the Indian equities. And Darshan, let's start off with Chris Wood first.
So basically, Chris Wood comes out with a weekly note called Greed and Fear, in which he's raised the weightage of India by almost 2 percentage points, and this comes on the back of cutting it from Korea. So increasing weightage by 2 percentage points for the India ex-Japan portfolio at the cost of Korea. So that's the first one. What he's saying is that the hole in India's banking system has been addressed with this big 2 lakh crore PSU bank recapitalization, and that it makes it positive. He's saying, but at this point of time, he's not going to add any PSU banks to his long-only portfolio. He had been holding SBI for a long time. Eventually, he got frustrated because nothing was happening. And remember, he had removed SBI from the model portfolio. So that is something that Chris Wood is saying. He's saying it's realistic now to look forward to new credit and investment cycle. That's his view that's coming in on the PSU banks. As far as I spoke about, he removed SBI from the portfolio after running out of patience. Now, as far as allocation is concerned, China is the biggest one. Now, with a 2 percentage point increase, India always was second, but from a 22%, it moves to a 24%. So that's the broad view that's coming in from Chris Wood on CLSA. Goldman Sachs has also come out with a note in which they are saying that they have upgraded, they are always overweight on India, but what they have done is that they have said that the bank recapitalization will spur the growth revival for the company. They've raised the Nifty target for in terms of the rationale, they're saying they're concerned over the lack of earnings and lofty valuations will fail, and profit revival is expected to happen in the second half of the year. Now, because of this, what they've done on the Nifty, the target price has been raised to 11,600 by year end. The earlier target that they had was 10,900, and that was by September. Now, September is gone. What are they overweight on? PSU banks, overweight and underweight on NBFC, because they believe that the structural change will happen. The people will move more into fund managers will more because of improving fundamentals, move much more into the PSU banks and go out of the NBFCs. What they are overweight on? Private banks, auto, consumer durables and industrial. These are what they are bullish on. Which are the stocks that they have spoken about in terms of the beneficials? Bank of Baroda, SBI and ICICI Bank is one of the themes they speak about, and infrastructure is the second theme that they speak about. So they have listed 10 stocks: L&T, Ultratech, Shree Cement. So it's not a pure play infrastructure, it's a general infrastructure. When cement is there, infrastructure is there, real estate is there, Bharat Electronics, Ashok Leyland, Container Corp. So infrastructure as a sector they are rather bullish on, and these are the 10 names that they've named in that report.